Yo, 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 it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today with another ADH wealth solution. Today, we'll begin to discuss fulfilling all of your financial needs. To contribute to channel growth, the links are in the description. To schedule an appointment of your own, or to purchase life insurance directly up to $1 million with no medical exam and an instant decision, my information is in the description. Lastly, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. And now, here's our next feature.
So I thought it would be helpful to spend a little bit of time discussing basics of investing in capital markets. And I don't want to go too basic because I don't want to bore anyone, but I want to talk a little bit about asset allocation, what those two words mean. I want to talk a little bit about what is a stock, what is a bond, the two major asset classes within asset allocations. And I'd like to talk a little bit about, Talani in her introduction mentioned that we focus a lot on goals-based wealth management. I'd like to talk a bit about why that's important. And a lot of that has to do with behavioral, financial analytics, and how we typically as humans tend to behave when we put money up at risk. So in terms of asset allocation, these are two words that many investors may have heard before or beginners. And so this is important because when we have a pool of money, whether that's $1,000, $10,000, $100, or $1 million, when we begin to invest, it's important to know how we are going to invest that pool of money. Rather than going into a Robinhood app and saying, I want to buy, I hope not, with a significant portion, GameStop, or I want to buy stocks, or I want to buy my favorite Peloton, right? Maybe I own a Peloton at home and I want to invest in that. That's all great, but what does it really mean that we're doing with the money? Stocks are one of the major asset classes that we talk about when we talk about investing in securities. Stocks are a percent ownership of a company. So to kind of boil it down into everyday scenarios, if I live in a neighborhood and a friend of mine wants to open up a pizzeria across the street, just because Alonzo and I were talking about New Haven pizza a few minutes ago, I can go to someone, a friend, and say, I would like to open this pizzeria. I need $100,000 to open it up. I have to buy the oven, I have to pay the landlord. So I can go and I can raise money from friends and family. And I can, in exchange for that money, I can promise them a percent ownership in my business. I'm essentially giving them a share of stock or 2 shares, depending on how I value that business and how much money I'm taking in and how much I'm willing to part with. And every company that trades in a stock market has a valuation and has a certain amount of shares that are out there for purchase. And so whether that's Apple or Microsoft or a smaller company like Peloton, they all have shares that are out there based on a certain valuation. So that's what a stock is. And as that company does better, that share price will increase over a period of time. And it's important to realize what that period of time is. If the period of time is a month or 6 months or a year, even if the company's doing well, it is fathomable that that share price might not move up. And that's because in the short run, the stock market is subject to volatility. And volatility is always there. But when we stretch out that time period that we want to invest for, that time horizon, from 6 months or a year to 5 years or 10 years, History has shown us that stocks increase over time and always tend to stay ahead of inflation. And so as the dollar weakens, stocks will stay ahead of that because companies have to grow faster than inflation in order to stay in business. So that's what a stock is. A bond, or fixed income, as it's sometimes referred to when we talk about asset allocation, is a loan. So Charles referenced that in a prior Brunch and Wealth, he talked about home ownership and how that creates wealth, generational wealth. So most folks in the country, when they go to buy a home, go to look for a mortgage. Most people don't have $100 or a few hundred or millions of dollars laying around in cash to go buy a house. So we go to a bank and we take out a loan. The bank gives us money, we give it to the seller, and we pay monthly for usually 30 years. A bond is the same sort of idea, except you as an investor are behaving like the bank. And so I can take $10,000 of my money and I can loan it to Microsoft. Microsoft puts out a notice and says, we are willing to take on investors for bonds. We're looking for bondholders. For the next 10 years, we're going to pay 2% a year or 3% a year, whatever the number is. And that number moves based on the current investment environment, that coupon that they're willing to pay you. And so bonds are really comfortable. A lot of investors like bonds because it doesn't have that stock market volatility that goes like this. Bonds move in price, but they tend to move like this. The best way I can explain the difference between a stock and a bond in terms of how they behave is if anyone on this Zoom call here can recall the first time they may have gone ice skating, or you may have seen this in a movie. Usually they go to the center of the ice and all the kids hold hands and they go all the way out to the boards and they all kind of skate in a circle. All right. The person who's the first or second kid in the center has it pretty easy. They're just going in a small circle. That's the bond. The person who's all the way out at the edge, they have a huge circle to make before they come around, and they have more ice skating that they have to do, more risk of falling. But as they go around the ice, they find that they start getting the hang of it. That's the time horizon. That's the stock all the way out on the edge, and the bond is towards the inside of the circle. Now, bonds are...
Hey folks, this last video was sponsored by my company, where we help people like you to reach their financial goals. We do this through a simple conversation where we help to identify and then protect your lifestyle, and then we implement a plan. The process starts at about an hour. So, if you want more information, or you want to schedule a consult, contact me via the information in the description box, and let's talk and see if we're actually a great fit for each other. And remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Thank you, and enjoy life.